CNBC-TV18, embarking on a quarter century of excellence.
Well, let's begin the day with a lot of big stocks to watch out for. First up, Wipro on our list. Reema's here to tell us why you should be looking at that one. Reema, morning.
Hi, good morning. So we're watching Wipro because there has been another senior level exit. On 8th of December, the Chief Growth Officer of Wipro, which is Stephanie Trotman, she had joined about 3 years back, has announced that she's stepping down for personal and professional reasons outside of Wipro. And her last date of employment will be 31st January. What's compounding the problem for Wipro is not just one exit, because this follows a spate of exit. The last, the notable one was Jatin Dalal, who was a long time serving CFO of the company. He had stepped down in the month of September, and that list will come up for you on your screen, how the head of healthcare, the CFO of America 1, the CFO of America 2. There have been multiple senior level exits for the last couple of months at Wipro, and this one has just been, as we wrap up 2023, even the Chief Growth Officer of Wipro has stepped down. Back to you.
Okay, all right. Thanks a lot for that, Reema. Well, let's hop across to Ekta. She's here to tell us about Dr. Reddy's and those observations that we were flashing for our viewers on the screen. Ekta?
Well, thanks for that. Antique has written on it. They maintain a sell with a target price of 4766 on Dr. Reddy's. They've said that basically the 10 observations could see an escalation. Now, just to put it into perspective, the facility contributes around 30% of the company's US revenue. It manufactures 4 of their top 10 products. According to Antique, some of the observations were severe, can lead to a warning letter. Observations include 1, 2, 4, 5, 6, 8, 9. So for people who do have the Form 483, can go through it. It has highlighted issues such as out of specification, which means that the drugs did not meet the specification which was required. Contamination, data integrity, market complaints. So FTO 03 remains one of Dr. Reddy's critical sites and manufactures over 100 products, and hence that stock could be under pressure in today's trading session on fears that there could be an escalation to a warning letter for this particular facility.
All right, Ekta, thanks very much for that. On Friday, GMR Airports was a big talking point. And of course, we broke that story, Nimish, about the big investor who's come in. But GMR Airports and GMR Power should be in focus once again this morning with more news. Vivek is standing by with that. Vivek, hi, morning.
Well, absolutely. Number one, it's the confirmation of the CNBC-TV18 News break. Our colleague Nimesh told you that, GQG Partners has actually come in, and along expected lines, the GQG Partners has number one picked up 1.67% stake. Along with that, Goldman Sachs Trust, which again, GQG Partners International Opportunities Fund has picked up an additional 3.4% stake. Who are the major selling shareholders? The non-promoter shareholders. So that comes in as a bit of relief. Now, the second piece of news that is coming, quite important as well. In the Goa airport, the user development fees, both for domestic as well as, international airfare has gone up. And along with that, this has come in both for embarking as well as disembarking. So, some additional revenues will come in for the company on the back of hikes of 9% and 2% respectively. And thirdly, GMR Visakhapatnam Airport, the Bhogapuram International Airport that the company would be developing. For that, the company has tied up the entire financing. So 3,215 crore is what the company has tied up. The total project cost is 4,727. So a lot of positive news flow coming in for GMR, the airport arm. Now, talking about GMR Power and Urban Infra, reports indicate that the company is in talks with investors to raise close to $100 million, close to 833 crore. This is for funding mainly to enter and execute the smart metering projects that the company has won.
Okay, all right. Thanks a lot for that, Vivek. Well, let's focus on Lloyds Metals and Energy. The stock, remember, has been a big multi-bag in the last few years. From the brink of, too much of debt, suddenly they came back in style. After the correction, though, the stock has recovered close to around 10%, I think, in the last few trading sessions. Last 1 month, in fact, it's up close to around 17%. Now, the news that came over the weekend is that the board has gone ahead and approved a few factors. One is raising the iron ore mining capacity to around 55 million tons. So that's good news. The second factor is they're looking at setting up a steel unit of close to around 3 million tons odd. And the third factor is earlier they announced a 4 million ton pellet plant. Now they're doubling that. They're talking about an 8 million ton pellet plant. So all those three, well, they are expansions that they're looking at and looking at forward integration. So I'll read that positively. And they've also, if you take the cumulative capex that they've lined up, it's close to 25,000 crores, which will be spent over the next 6 to 7 years. But they're saying all of this will be done via internal accrual. So expect the stock to continue its upward journey.
Okay, well, there are plenty of other stocks that are in the news this morning. Ekta has the fine print for us. Ekta, what are you looking at?
Well, yes, I'm looking at two stocks from the pharmaceutical space again. Newland Labs, I'm watching that one. Maybe the stock could be in the red because the promoter, Dr. Rao, has sold around 3.12% stake in the company via the open market at around 5,012 rupees per share. Remember, he's the founder, promoter and the executive chairman of Newland Labs. The shares sold are worth around 200 odd crores. The funds are going to be used for personal purposes. There's no sale, according to him, likely in the foreseeable future. The commitment is towards Newland Labs. The promoters hold 35.97%, and the reason is because the stock has run up significantly. It's up around 2.3 times in the past 1 year. It's rallied around 3.2 times from its 52-week low. So no surprise that the promoters would want to take some money off the table. It'll be interesting to see the stock movement based on that today. MedPlus is sentiment red probably because the subsidiary of the company has received orders from the Drug and Control Authority, where it has been issued by the Drug Control Authority of Andhra Pradesh as well as Telangana. And for Andhra Pradesh, for both of them, it's letters on violation of various conditions of licenses. So the drug controller of Andhra Pradesh has suspended their drug license for 7 days, and of Telangana, they've suspended their drug license for 3 days. Expect that stock to see some amount of pressure today.
All right, thanks a lot for that. Well, Vivek is also with us, actually. He has a list as well. Vivek, what are you looking at?
Well, that's right. Quite a few order wins coming in. So first on our list, Mazagon. The company has received an order from ONGC. This is for a part replacement of a pipeline project. Total cost of this particular project is 1,145 crore. Order will be executed by 15th of May 2024. Second stock on our radar, PSP Projects. The company has emerged as an L1 bidder, or the lowest bidder, for a Gujarat project worth over 295 crore. So now the company's total L1 pipeline is over 1,060 crore. And lastly, Subros, watch out for this particular stock in trade. Number one, the company has received an order worth 25 crore from the Indian Railway. This is for supply of air conditioners. Additionally, the formal notification too has come in from the Indian government, making the truck cabin mandatory from October 2025. So on the back of that too, there could be some sentiment positive coming in for Subros today.
Okay, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow. There's GMR Airports, GMR Power and Urban Infra, Mazagon Dock, PSP Projects, Subros and Lloyds Metals and Energy. While stocks with negative news flow this morning, there's Wipro, Dr. Reddy's, Newland Labs and MedPlus Health. But there are some brokerage notes that you need to focus on as well. So Hormuz is here to give us the fine print on that. Hormuz, good morning.
Morning, Sonia. And I start off with MedPlus, and Ekta highlighted some news updates for that. But Nomura has maintained its buy rating on the stock. It has increased its price target from 952 earlier to 974. And it says that some of its initiatives that it has undertaken, like introducing generic medicines at a discount and expanding its diagnostic footprint beyond Hyderabad, and its subsequent impact on its near-term earnings are some of its key concerns. But it says that although these strategic initiatives are right, it says that it will need a gradual implementation for its successful execution. Now, steel stocks, they have been underperformers in 2023, and Morgan Stanley expects this trend to continue in 2024 as well. Now, it has cited weak global macros, domestic supply being more than demand, and unattractive valuations as the factors behind this move. And it says that the China stimulus may not improve domestic demand materially, and although a strong demand recovery in China and sharp inventory destocking are some key upside risks. Now, Morgan Stanley remains equal weight on Tata Steel and SAIL, while it is underweight on GSPL and JSW Steel, with a modest increase in price targets for all four of them. And lastly, Wipro, which has seen another top-level exit, as Rima was highlighting, and Morgan Stanley believes that it is a matter of concern because the chief growth officer had a key role to play in managing the large deals team at Wipro. Now, Morgan Stanley is underweight on Wipro with a price target of 370 rupees, which is one of the lowest on the street, and that implies a potential downside of 12% from Friday's closing levels. Back to you.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go across to Manisha. She's joining to give us a complete wrap-up of what's going on in the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, where we are looking at strength for a second straight day. But remember, prices did decline 5% in the previous week, and that was a seventh straight weekly decline. Well, the markets do not think that there's a lot of output cuts coming in from OPEC. And in the meanwhile, there is weakness in demand from China and near record production from US as well. But the recent support comes in on the back of the US looking to replenish strategic reserves by 3 million barrels by the month of March 2024. Also, there are statements from China officials pledging support to domestic demand, and that seems to have done the trick, is the reason you're looking at prices back above $70 a barrel there. But it's not so great news for the metals as a sector. The gold and silver prices have continued to decline. This is going to be yet another weekly start where we also have seen copper and steel prices decline. The only thing that actually seems to be doing well is coal, trading above $150 a ton, and the iron ore prices, after gaining nearly 7% in the previous week, have started this week on the positive note as well.
All right, Manisha, thanks very much for that. That's Commodities in Focus. We'll take a very quick commercial break here. Prakash Devan will be with us for some fundamental stock talk. So we'll talk to him about the areas he'd like to bet on as we start a fresh new week. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence.